Here's a roundup of how the oil and gas companies are expected to report numbers in the fourth quarter of FY23. Now, when it comes to oil marketing companies like Indian Oil Corporation, BPCL and HPCL, they are expected to report a strong set of numbers, and this would be on the back of a steep sequential rise in the marketing business of the company. Now, oil prices on a sequential basis were lower, while retail fuel prices like petrol and diesel prices remain unchanged. Now, because of this, the marketing margins are expected to increase. This, coupled with higher marketing volumes, would aid the marketing segment of the oil marketing companies. And when it comes to the refining segment, the Singapore gross refining margins averaged higher at around $8.2 per barrel, which would aid the refining business, and this, coupled with higher refining throughput, would aid the overall numbers. However, because of the fact that the crude prices averaged lower on a sequential basis, there would be some inventory losses that the oil marketing companies would incur in the fourth quarter of FY23. Now, when it comes to the upstream companies, as I was mentioning that the oil prices on a sequential basis were lower, this would be the only reason why the upstream companies like ONGC and Oil India would report a muted set of numbers. Other than this, the gas prices were pretty much stable on a sequential basis at around $8.57 per MMBTU. So no harm on that side, but because of lower crude prices, lower volumes and higher other expenses, the upstream companies like ONGC and Oil India would report a weak set of numbers. Moving on to the gas business. Now, GAIL is expected to report a strong set of numbers. Now, GAIL has 4 business divisions, and out of this, all the businesses are expected to report a sequential growth in the fourth quarter. Now, if you see the transmission business, that would be benefiting on the back of higher volumes and lower cost. The marketing business would benefit because of better trading margins when it comes to specifically to the US gas volumes. When it comes to the petrochemical business, the losses would be lower on this side, because if you see the cost for the company of sourcing gas was lower and petrochemical margins were also higher on a sequential basis. And lastly, when it comes to the LPG business, that would benefit on the back of higher realizations in the fourth quarter of FY23. Now, when it comes to city gas distribution companies, IGL and MGL are expected to report a strong set of numbers because of some moderation in LNG prices, nearly 40% drop that we had seen on a sequential basis, and also they were allocated higher gas from the difficult fields. Now, both this factor would lead to lower cost, and this, coupled with higher volumes, would aid the margins of and the earnings of IGL and MGL. However, on the other hand, Gujarat Gas is expected to report a weak set of numbers because the company had to take multiple price cuts or even steep price cuts in the Morbi region for gas prices. Now, these price cuts were taken by the company to gain the volumes that it had lost to LPG earlier. And lastly, when it comes to Reliance Industries, on an overall basis, the numbers are expected to be modest, but segment-wise, if we see Jio, that is a telecom business, is expected to report a muted set of numbers. Whatever growth we'll be seeing in the Jio business will be largely led by subscriber addition. When it comes to the retail business, the growth will be purely on the back of store expansions. Margins are expected to be stable, but when it comes to the oil to chemical business, that is the O2C business, that is expected to lead the growth. Now, analysts are expecting at least a 10% EBITDA growth on a sequential basis when it comes to the O2C business of the company, and that would be purely on the back of higher petrochemical margins and higher refining margins for Reliance Industries.